This is a little cash accrual problem that I made up, and I gave you the balances in a bunch of balance sheet accounts, right? Assets and liabilities, accruals and deferrals, right? And then I took the cash receipts where the cash disbursements were, and I separated the inventory. And your question was, is a merchandising firm? Yeah, right. There's no manufacturing going on, but we could add that level of complexity if we wanted, right? On the CPA exam, they can do whatever they want to you, and they will. Relax and use what you know. Okay. Same with this kind of stuff. I tried to make this one fairly straightforward, but have a lot of different accounts, huh? What we're going after here. So we're going to do a cash basis income statement. That's very, very easy. And we're going to do an accrual basis income statement, which takes a little bit of work, huh? Okay, so what did you guys do with this thing? How'd you approach it? By the way, I have a question for you. How many of you did this? There's a few hands didn't go away. That's not good, right? Good integrity for not saying you didn't do this stuff. Do this stuff. Okay, so anyway, here we go. All right, that's pretty good though. These last semester, it's a disaster, huh? Remember last semester? How many hands would go up when I asked if they did something? 2 out of 20.
Sometimes it was more.
Sometimes we had 3 or 4.
Not very often.
Yeah. Well, usually there were only about half the class there, so yeah, okay. Anyway, this is much better, you guys. Keep it up, keep it up. So anyway, how would you approach this thing? If you want to do a cash basis statement, you put the company name at the top, right? By the way, if you're doing it on a test and I give you the company name or something, use the company name, of course. So we'd write the company name down.
You want it all official with the date and everything, right?
Yeah, I do, but you can abbreviate for me. When you're doing stuff for Alan Deck in 212, ask him, because he's a little bit nitpicky about some of that stuff, okay? So ask him what he wants, okay? If he says in good form, man, you write everything out perfect, okay? So anyway, yeah, so I'd put the company name at the top. I would do that on the cash basis, and I'd do it on the accrual basis. Wouldn't you guys? Write the company name down. And then on the cash basis, I'd say cash basis income statement or something like that, okay? So cash basis income statement. It'll make a difference on the CPA exam, by the way, okay? And then on the other one, I would say income statement, spell it out, right? And then I put in parentheses accrual basis. Why am I putting it in parentheses? Because I want them to know that I know that you don't have to say that. Because generally accepted accounting principles require what? Accrual, absolutely. Okay, so here we go. We've got, then we need what? Yeah. And would this be a specific date or for a year ended? It's an income statement. Come on, what is it?
Period ended.
Yeah, for a period ended. For the year ended, for the month ended, for the quarter ended. So if it's for a year, for the year ended and the date, right? On both of them. Be very careful not to call both of these just an income statement. If you're doing a cash basis income statement, you call it an income statement without any modification to that, they'll think you think that's generally accepted accounting principles, okay? And they'll deem it. So, and so will I on a test. Okay? All right, so then what are we going to have? If I'm doing cash basis, guys, versus accrual basis, what am I going to do under cash basis? It's basically cash in less cash out, right? Okay? So it's going to be cash, and you can call it revenue, so you put the word cash on it, right? Okay, so cash revenue, less what? Cash for inventory, cash dispersed for inventory maybe, right? If you wanted to use all that information I gave you, right? Because I gave it to you separately, didn't I? So cash dispersed for inventory, sound good? And then what I might have then is net cash for that one, right? Net cash in. You can call them whatever you want on a cash basis one. It's not GAAP anyway. And then what I'd have is cash dispersed maybe. To do something like this. Cash dispersed for operating expenses. Sound good? And then what I'll have is net cash. Right? That's it. Net cash in, I guess. Was in more than out. And you can do this one immediately, can't you? What was the total cash receipts, everybody?
480.
480. What's the cash disbursements for inventory?
250.
250. What's the difference between 480 and 250? 230? Sound good? So I got 230 net cash in before the operating expenses. And what would operating expenses be? So you said total is 420. 250 was for inventory. What is it?
170.
170. Excellent. Okay. So what's my net cash in?
60,000.
Okay, and this 60,000 represents what, everybody?
Ending cash balance. Cash basis.
Well, it's not really the ending cash balance unless it's the first year of operations.
Cash basis income.
Cash basis income. Yeah, cash basis income. You could call it that. Okay, it'd be okay. Cash basis net income. That'd be okay. So you want to use that term instead? I don't care. But put cash basis on it, okay? Right? So everybody knows. All right, but what's it going to look like over on the accrual basis statement?
Well, hang on just a second, I have a quick question. Why would you break out your inventory cash disbursement and your operating inventory, or your operating
Just because the problem gave it to me, why not?
Oh, so just to kind
A
of
little more information. And it kind of matches the accrual basis one we're going to do, sort of, right? Because what are we going to do on the accrual one? More important on the accrual one. You don't really have to separate those if you don't want it on cash basis.
Because I'm looking at
But you might have more lines. Why not? You know, cash for this, cash for that, right?
Okay.
More information, just like on an accrual basis statement,
Okay.
right? That makes sense?
Mhm.
Okay, so what are we going to put first here?
Right.
Yeah, or sales, right? Service revenue or whatever we're doing. No, I guess we're selling product, aren't we? So this would be sales. First line is going to be sales. I don't know what it is yet, though. What's the second line going to be? Cost of goods sold, excellent, which is an expense, of course, right, guys? And the difference is? You guys know what the difference between sales and cost of goods sold is? How about gross profit? Yeah. Or gross margin, some people call it. Gross profit's probably safer. Okay, and then what do we take away? Operating expenses, but it's not cash operating expenses, right? It's accrual basis, right? Got to get the deferrals and accruals in there. Same with the cost of goods sold. Okay, notice I didn't call this cost of goods sold over here, right? And I didn't call it operating expenses over here. It's cash flow. Okay, and what's the difference between gross profit and operating expenses? Net income, but of course, this is going to be accrual basis net income. It's the real net income, and that's going to be before tax, of course, and they could throw that in there too if they want, huh? Okay, into the problem. All right, so what are we going to have to do to get the information to plug back into these? I want all these numbers. What are you going to do, guys? Identify which accounts go together, huh? So you tell me, for sales, which accounts go with sales? So I'll start here. I'm going to have sales I want to solve for, right? I'd like to know what sales is, which of course is going to be a credit, right? I want that number. That's what I'm going after. So I go right after it. Okay, what do I know?
Accounts receivable.
Okay, I know something about accounts receivable. And do accounts receivable have anything to do with sales? Well, of course. It's debit accounts receivable, credit sales, right? Right? Okay, what do I know about accounts receivable?
They went from, beginning was 54,000, ending was 65.
So this goes from 54 to 65. It looks to me like it went up by 11. What does that mean?
That you sold more than you received.
Yeah, you sold 11 more than the cash you received. Dot. My sales are 11 more so far than the cash that was received. Right, guys? Everybody had their head around that? So this isn't something you do mechanically, right? It just makes sense. It falls right out for you. Okay, then what else do we have? Unearned revenue. All right. Why are we putting unearned revenue with this? You guys are leaving out some other stuff here. You're leaving out accrued expenses and prepaid expenses and accounts payable and inventory. Why do you want accounts receivable and unearned revenue with sales? Because they relate to it. What's the other way another way you could have sales? They could pay you in advance, right? What do you do when they pay you in advance? Debit what? Cash. Are you tired today?
Yeah.
Both of you guys. You're just sitting there looking like, I don't know. What do you do when you get cash? Yeah, debit cash, right? And credit what?
Unearned revenue.
Unearned revenue. Then when you earn it, what do?
Debit the unearned.
Debit the unearned revenue and credit sales. Not cash again. Not cash. You're not giving the money back. Sales, right? Okay? That's how you get those sales. So we have sales on account, the account receivable, right? Is that an accrual or a deferral when I debit accounts receivable and credit sales? That's an accrual. What is it when I debit cash and credit unearned revenue?
Deferral.
A deferral, and then later I earn it, right? Okay? What's the other possibility?
Deferring expenses.
Well, no, let's do the revenue side first.
They just pay you cash.
They pay you cash and you earned it.
Yeah.
Debit, cash, and credit sales, right? It's cash sales. Okay, and then why did we leave out inventory? Why did we leave out accounts payable? Why did we leave out prepaid expenses and leave out accrued liabilities, guys? Because they have nothing to do with revenue. They have to do with what? Expenses. In fact, the inventory and the accounts payable, what expense do they go with? What happens to your inventory? You sell it, and it becomes what?
An expense.
An expense named.
Cost of
Cost of goods sold. You guys ever hear of debit, cost of goods sold, credit, inventory? What does accounts payable go with? Inventory. What happens when you buy your inventory? It's almost always on account, right? Nobody. You know, do you think when they deliver auto parts out to Ford, right? If $1 million worth of auto parts show up, somebody's standing there with $1 million in cash to hand to the truck driver, right? It's a cash transaction. Give me a break. It's all on account. So what do? Debit inventory and credit accounts payable. And then when they pay it, what do? Debit accounts payable and credit cash, right? You guys know this stuff. Let yourself use it. Okay, what about the prepaids and the accrued liabilities? What do they probably relate to? Not your cost of goods sold. They relate to your operating expenses. And it naturally fits together, doesn't it? What if I gave you, I want to know rent expense, and I gave you prepaid rent, and I gave you rent payable? Did you figure out that those all go together? They're going to do that on the CPA exam. The problems in the book were easier than this one, weren't they? Only because they only give you a little tiny piece of it. All you got to do is identify what goes together. Okay? That's it. Which accounts belong together. Okay? All right. So what do we know about unearned revenue?
credit balance.
Okay. It's a credit balance. It starts at,
10,000.
goes down to
8,000.
8. And of course, you don't have to write down these T accounts if you don't want to. You can just do all this in your head if you want, right? As long as you keep it straight, add the right things, subtract the right things. I think that's risky. Because here you can't screw up, right? What does that mean? If unearned revenue went down, what happened? We earned
Revenue.
more than we
So,
received, right? More people paying us in advance, we earned more of that than they paid us, right? That's what happened. Okay? So what else do we have on this? We need one other piece. We got the cash deal, right? So what happened with cash? These would be cash what? Received? Okay, how much was cash received?
480,000.
Okay, it's the same 480 we got up here, isn't it? Okay, we can write this as a journal entry, couldn't we, everybody? What would that journal entry look like? You don't have to, but you can if you want. I'm looking for sales. I'm going to credit sales. That's the number I want. That's this one right here. What else do I have? Debit cash for how much? 480. We have that one, right? And what else do we want to do? Debit receivables for 11. Everybody agree with that? What else do we want to do? Yeah, debit unearned revenue for 2. You got it. That's all we do. Don't flail around with this stuff, you guys. It just makes sense, right? So what must the sale be?
493.
493. Boom. Okay? So now what do we want to do with that, seeing as we now know what the sale is? How about write it down? That's it. Okay? Got one. All right? So now what do we want to do probably?
Match the expenses.
Yeah, let's do the same thing with expenses, huh? So let's do inventory first, which is going to become what? Cost of goods sold, right? So I'm going to do cost of goods sold, that expense account, and what else am I going to be working on? Here's the deal with the cost of goods sold, right? It flows through inventory first, then into cost of goods sold. And the cash that you're paying out really is paying off an account payable typically, right? By the way, could I have some that's debit inventory and credit cash? Sure. Could I even pay for it in advance sometimes?
Yeah.
And they get the inventory? Yeah, it doesn't matter. We just use whatever accounts they are, huh? Whatever they're using, and figure out where they're at. So I want inventory Because inventory is going to do what? I'm going to debit cost of goods sold and credit inventory. Right, everybody? That's it, isn't it? Okay, I know that. I'm looking for this number. That's the one I want, right? I always know where I'm going, okay? So what do I need to know here?
What inventory did it?
Yeah, what inventory did. So what happened to inventory?
Went up over 65 to 69.
Okay. Why am I putting it on the debit side?
Because inventory is an asset.
It's an asset. That's it. And debit means left. Yeah. Okay, we always go back to that, right? It's an asset. They come first. They're on the left. Anyway, yeah. So it goes up by 4, which means what, by the way? This side's what? That's the inventory I bought, right?
More than you sold.
I bought more than I sold. That's it, by 4, right? Okay, that's it, okay? All right, now that doesn't mean I paid for more because it's going to run through accounts payable, isn't it? Okay? So let's think about accounts payable because really what happens is I debit inventory here. I'm going to credit accounts payable, aren't I? Isn't that right, guys? I know you know this entry. When you buy inventory on account, you debit inventory, credit accounts payable. We're just using it is all we're doing here, okay? Using stuff we already know. What do I know about accounts payable, though?
Went down 52 to 50.
From 52 to 50? So what's the deal? I increase accounts payable when I buy something on account. When do I reduce it?
When you pay it off.
When I pay it off. That's coming out of what account?
Cash.
Cash, of course, right? So it's going to be a debit to accounts payable and a credit to cash, right? When I pay it off. Everybody good? Okay, so now if accounts payable goes down by 2, what does that mean? I paid out 2 more cash than I borrowed, right? I think that's true, which is I purchased what I borrowed, right? Okay, so it's going to all collapse together. How much cash went out total, though? We know that. What do we say?
It was
250. Yeah, 250. So 250 came out. Where did it come out of course? Accounts payable. Wouldn't that journal entry be debit accounts payable, credit cash, everybody? It would, wouldn't it? We know that. Okay? Oh, well now I kind of got it made. What else can I solve for now? Yeah, there's 2 unknowns here. There's an unknown just laying out there by itself here, right? Okay, I can't do that one. I just solved these 2, this one, right? Come on, what's this number here? What's it got to be? 2, how much? 252, is that right? You guys gonna let me get away with that? 52 plus 252 less 250 is 50, is that right? I don't think so. I don't think so. That's not the direction it's going. Come on.
240.
248?
Yeah.
That's not a little better? I think so. All right. Okay. How many do you have 248 in your paper? Oh, what the hell? I'm a failure. You guys don't know how to do this yet, do you? I think it's 248, isn't it? Have I figured something? You have 248 in your paper? You want to tell me? Yeah. Okay, you do have it. Who else has it? Come on. No. Okay. Why did you not say anything when I wrote? Oh, no. Did you have it before we started this?
Yeah, I was just.
Okay, she's the whiz kid today. Okay, fine. Jeez. This is so easy, you guys. It is. Did you have it?
I didn't do it.
Yeah, I get it. Okay, yeah, I know. You don't. Right? You know, 35 is your when you start, so let's get this 50 grand. Make the time. Okay, all right. So you had that number? Were you listening to me at all? Or you going, okay, good, okay, good. No, I'm just curious. Okay, so here's the deal. I said something ridiculous.
That's why I was thinking.
I'm your boss, and you said nothing. You let me go ahead and make a mistake. This one I happen to have made on purpose, by the way, just to see if anybody had the guts to say, hey, Keith, you can't even add. You guys do know that you would add up the credits there and subtract the debits to get the ending credit, right? You didn't say a word. Did you notice?
Yeah, I was about to say something. Whenever we do it.
I don't know. All right. Have the courage, you guys. Have the courage and be moving. Keep your head into it. All right, anyway, so fine. But where does the 248 come out of? Or what's the debit for the 248? Right? Credit accounts payable. Debit what? What do we buy? Not cost of goods sold. Inventory. Okay. You know what, you guys? We got to do this. You guys are scaring me. Look, what are the journal entries? When you buy inventory, what do? Give me the entry for buying inventory. Debit what?
I'm paying cash.
No.
Accounts payable.
It's almost always on account. Debit inventory. It wouldn't matter if you paid cash for some of it. We'll get to that. Okay. It doesn't matter if it's mixed. We just care about where we end up at the end anyway here.
Okay.
Right? We can put them all together without even knowing what they are. It's cool, right? Okay, so you debit inventory when you buy. What do you credit typically when you buy? Accounts payable. I just asked you guys that. It was a credit to accounts payable. Of course it's debit inventory, right? I know you know this. Okay, then what happens when we pay for it? Can anybody pay for it? You debit accounts payable. I know you know this. And you credit what? Cash. Okay, and then we use it, which means we give it to our customer, right? And they go away with it. What do we do then?
Debit cost of goods sold.
Yes, debit cost of goods sold. And credit what? Inventory. Why is this not just going boom, boom, boom for you guys? I know you know it. How come you can't use it? You've got to get there, okay? When you go to work, you can't sit around, gee, let me write all this down and think through it for something like this. Oh my gosh. Okay? Right? So let's go. Right? Anyway. So the other thing is keep your head into it while we're doing this. Okay? Every day. It's good training, no kidding. Okay? Besides me entertaining you, right? Yeah, I know. Okay. Anyway. So what's the last piece, guys? We did this one. We did this one. What have we not done? That. Where is it? Debit cost of goods sold and credit inventory, right? I don't have it anymore. I gave it to my customer. It ceased to be my asset, so I credit the asset. What did it become?
Credit inventory.
Oh, credit inventory. What did it, the inventory, that's reducing
Cost of
it.
goods sold.
It becomes cost of goods sold. How did it become cost of goods sold? I used it up. You know what? Wherever you got this, the store, right, had this on their shelf. He took it up to the check stand, right? Scanned it yourself probably, okay? And he left. When he scanned it, they credited their inventory and they debited cost of goods sold, right? For the cost of it. And they debited cash, because you probably paid cash, right? They debited cash and credited sales for the sales price. What do you bet the sales price is more than the cost? You guys know this stuff, don't you? This is how it happens. And all we're doing is we're analyzing what must have happened. And again, we don't care how much was cash and how much was credit, how much was, paid in advance. Doesn't matter. It all roll out in the end in total, okay? Right? Because they all go together anyway. All right, so what's that entry, guys? How much?
244,000.
Is it 244? Is 4 what? Less than the 248? I think so. Excellent. Okay? That would have been this entry right here. Okay? So now what do we do with those, guys? We know cost of goods sold is 244. We did all of that to get that number. What are we going to do with the 244?
Credit to the income statement.
Yeah. And what's my gross profit?
249.
249? Excellent. We can do this, can't we, guys? By the way, your competitors cannot do it. Nice, son. You're welcome. This is the end of the chapter. At most schools, they're going to teach you principles in intermediate. I don't know what they do in principles, nothing. Right? Those of you who had accounting in high school, that's what they do. Okay? Nothing. You guys are getting this in your first intermediate class really well. And then we're going to pour more on you. And you just blow your competition away. Because you know more than them. Right? And you can think faster. Okay? You really understand this stuff. That's what we're trying to do. It's painful, isn't it? Okay, let's do operating expenses. Can you guys didn't all get, how many got all this right so far on your paper? Oh, jeez. Do operating expenses. Do it. What accounts go with operating expenses? Prepaid expenses, and accrued expenses, accrued liability, right? And cash. Do it. You got 4 accounts to work with. Make a journal entry. I told you it was a little different in here, huh? My principal students are smarter than me. You just feel the wheels spinning in here. You guys are working. It's good. I like it. Did you write down 4 T accounts? Did you write down everything you know in them? Do you know what the journal entries are? It just falls right out. Takes a little time. Now, I'm afraid you're going to do this in what? 3 minutes? 4? You're going to practice a whole bunch of times. You guys can pick up numbers for each other, you know, for each other's problems. Right? I'll make one, I'll do the review session. We're doing a review session when, you guys?
Monday.
Monday.
3 to 5.
3 to 5. In
Or,
214,
244.
I think, downstairs again. Yeah, it's an okay room. I mean, bad things we can record it. So, here, yeah, obviously. But if not, just work, right? Work. And somebody will write down whatever problems I make up, whatever we do, and we're gonna, you know, can't do that.
For the cash, you do all the records.
Well, I better take the inventory out, otherwise it's gonna be way off, isn't it? I just want the cash that went out for operating expenses, don't you? Actually, ask you that question.
Prepaid would have left for.
You could answer for something.
It accrued would have left.
You already have it, didn't you? John.
I'm here today, I'm alive.
I'm here and I'm alive, Debbie. You know. You're feeling good too, right?
I'm feeling a lot better than I was.
Okay, good, good. All right, everybody, let's do it. What account are we going for?
Prepaid expenses.
Operating expenses, and we are going to use probably prepaids,
And accrued.
accrued liabilities. You know, you have to be able to identify which accounts go with what, don't you? But you know the entries, okay? And then, of course, we have to pay the liability. We're going to pay it with cash, aren't we? The piece we want is the debit to operating expenses, right, guys? How does this work? Actually, what happens is some of them are debit operating expense and credit cash, right, guys? Do we pay any operating expenses with cash? Yes. Some of them are debit operating expense and credit accrued liabilities. Do we accrue any operating expenses? You know, like debit salary expense and credit salaries payable, debit rent expense, credit rent payable, debit interest expense, credit interest payable. Sure, any operating expenses can be accrued, right? Okay? Debit income tax expense, credit income tax payable, you know, all kinds of stuff. Do we ever pay anything in advance? Sure, rent, insurance, taxes sometimes, all kinds of stuff. What's that going to be? Debit prepaids and credit cash, am I right? Doesn't that happen? And when you do that, then later you use it up, and as you use it up, what do, guys? Credit the prepaid and debit operating expenses. So operating expenses come from all 3 of those, right? From a cash expense, from an accrued expense, and from a prepaid expense. The accrued expenses are accruals, of course. The prepaid is it's an asset, but what did we do with the expense? When we debited prepaid, we did what? We deferred it. We deferred the expense, right? So you know the difference between a deferral and accrual. Okay, great. Well, this shows prepaids coming in and going out. This only shows accrued liabilities coming in. What do we have to do with that accrued liability, of course? Pay it, right? And when you pay it, what do? You debit the accrued liability and you credit cash, of course. So let's go through what the entries are for this thing. Let's figure out what the entry must be. I just want to know all three of these. Whoops, how did I do that? I just want to know what these are in total. What do you think? So I want a debit to operating expenses, okay? And then I want to credit to cash. And I don't know if I debit or credit prepaid or accrued liability in total yet, right? I don't care how much went into prepaids and how much came out. I care about the change. I don't care how much went into accrued liabilities and how much came out. I care about the change. Everybody got it? So tell me what you know, how much cash went out for operating expenses? 170. I know this credit to cash is 170. Okay? I know that. What do I know about prepaids? I don't know the operating expenses what we're looking for. If this starts at 6 and it goes to 10, what does that mean? You purchased 4,000 more prepaids, right? Paid for than you used. Okay? So I've got 4 coming in here, so I'm going to debit prepaids for a net of 4. Now I know I debited prepaids for a big number and then I credited for a big number, but the one I debited for is 4 more than the one I credited for. That's all, right? So I got it. What happened to accrued liabilities?
Increased by 2,000.
Okay, well, how much was it though? You're right, you can just take the change, you don't have to write all this down.
9 and 11.
Starts at 9 and goes to 11? What does that mean? You must have increased it by more, which means you bought more, you accrued more expenses. Your expenses are 2 more, right, than you paid for, right guys? Everybody agree with that? So accrued liabilities is 2 over here, isn't it? By the way, could prepaids go up or down? Of course. Could accrued liabilities go up or down? Of course. Could inventory go up or down? Of course. Could accounts payable go up or down? Of course. Just put in whether it's a debit or a credit, right? In every case. Okay? All right, and what do we have left? Operating expense. Is there anybody who can't tell me what it is? Of course you can do it, right? How much is that?
168.
168. That's got to be the number. Okay? So here we go. Plug 168 in. And what is the net income for this company? 249 less 168 is how much?
81.
81. They didn't make 60, they made 81. Everybody got it? And we're perfection. You guys got a little more work to do on this? Good. Okay.
It was too easy.
It is easy.
No, the way I did it was just wrong. I knew it was too easy when I was doing
Oh,
it. There's something wrong, it was too easy.
If it's, how many of you got this thing completely right? Anybody?
I got 81, but I just like weird with it. Like, I don't know how I did it, but I ended up.
Oh, you might have done okay. If you could replicate it. You know what replicate means? Do it over and over and over and over, exactly the same. By the way, do you have to use these T accounts? No, you could just use the journal entry. I would use the T account and the journal entry. What for, right? The journal entry's in the T accounts. Or you could just do the journal entry. Or what you could do is you could just take where you are with cash and add and subtract, right, for all the changes, and you get the ending number. It's okay. You could even take, if it asked me just for the income, I could take this 60 number, I could compute 480 less my, 420, and get 60. And I could take the 60 and I could add and subtract everything I need to and get to here. Do a reconciliation for me. Do this right now. Reconcile between this 60 and this 81. Put 60 at the top. Cash basis 60 at the top of your page. Down at the bottom of the page, right, draw a line and write down accrual basis, 81. Got the idea? And then explain the difference. Because if I got a question that asked me just, if they told me cash basis income and they asked me what's accrual basis, I wouldn't go through all that trouble. I'd just figure out what I need to add and subtract and get that, right? And by the way, you don't really add and subtract. You use debits and credits, right? We're adding and subtracting debits and credits, of course. This is a cool problem, isn't it? It sort of puts it all in one place and you can see it, didn't it? I promise I will give this to you on a quiz, a test, and a final. number of things in here that are gonna be 30 or 40 points, right, out of the class. This is one of them. Knowing how to do this stuff.
You just want us to find the numbers that.
I want you to reconcile. So, yeah, so what we're doing is just this. We'll start with, I don't know why I don't use different sheets. It's ridiculous. Let's do that. So I've got accrual, or cash rather, cash basis, down to accrual basis. What did we say cash basis income was? 60 was? What was it, accrual basis? 81? List them. I think there are 8 things that cause that. You can get directly to it. I think I'm going to put in accounts receivable, unearned revenue, giving myself enough room, inventory, accounts payable, prepaids, accrued liabilities. Those are the only things we had. 1, 2, 3, 4, 5, 6 things. 6. So we had cost of goods sold, operating expenses, and sales, right?
Yes.
What happened to each of those things with the direction? This is the way you can do it too. That's what you're kind of trying to do there. Right? You go the right direction with it, it'll be just fine. All of them pop out. Can you do those? Doing it, you're writing a dollar amount down next to each of those 6. Either brackets around it or not. When you add it up, it's going to go 6 to 81. Just a little reconciliation. I've seen CPA exam questions where they ask you to convert from cash to accrual or from accrual to cash. You go either direction, right? And then they ask you to do a reconciliation of it. Reconciliation is the easy part, guys. We already figured out what it is. Getting there? It's just what happens to net income, right? Is accrual more or less than cash for each of those? You have them all? You got it? Yeah? You getting there? Look at the first one. Accounts receivable. Did accounts receivable go up or down? Up. Would that mean more income or less income than cash basis?
More.
You sold more than you have in your cash basis income statement. So what was it, 10? 11. Okay. 11 more income. Everybody agree with that? What happened to unearned revenue? Go up or down? Went up. What does that mean? Some of the cash you received?
No, it went down.
No,
Oh, went down. Oh, okay, went down. All right. So it went down. So what does that mean?
You just earned more.
You earned more than the cash you received. That's more too, isn't it? How much was that? 2. Inventory, what happened to it? It went up by 4. You bought more than you sold. Everybody agree with that? What does that mean? Careful. That decreases what? I bought more than I sold. It decreases what?
It decreases the expense. What does that do to income?
Increases.
Increases income. How much was it?
4.
4. Okay, accounts payable.
Went down by 2.
Okay, so 2 of the cash going out was not for an expense, so expenses must be what? Less than the cash that went out, which would give me what? More income, right? You in the right direction? By 2. Was it 2?
Yes.
Accounts payable went down by 2. All right? Okay, how about prepaids? What happened with prepaids? Think about it.
Went up by 4.
It went up by 4. What does that mean? A whole bunch of the cash you paid out,
Hasn't
4,000,
been expensive.
has not been expensed yet. So the cash income is lower than the real income, right? Is that right? You go the right direction? This drives me crazy. Up by 4. Okay, we'll see if we got it right when we get done here. Accrued liabilities, what happened to those?
Up by 2.
Went up by 2. That would give me more expense, less income by 2, right?
Right.
Okay. So does that work?
Yes.
11 plus 2 is 13, plus 4 is 17, plus 2 is 19, plus 4 is 23, less 2 is 21, and we are miracle workers. And you could have done it directly like that. In fact, you could even do the statement directly like this. What you'd do is you would take your cash in, right? Cash in, which is revenues, and you would add 13 to it, and you got it, right? That fast. And then you could take your cash out for inventory, and you could subtract 6 from it, right? And you got that one, okay? Accrual basis cost of goods sold. And then you could take your cash out for operating expenses, and you could add 2 to it, subtract 2 from it. Yeah, the other way. Subtract 2 from it. And you got it, right? You don't have to go through all those key accounts and all those journal entries and all that stuff. But I'll tell you what, it might be just as fast as doing it this way. You really know what you're doing, you lay it all out there, boom, 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 just falls out, and you can't screw it up. Here, can you put this arrow the wrong direction? Pretty easy. Yeah, you really can. And I knew what the answer was when I'm doing it, and I'm still having to think of how to think it through, right? You can. I like that. I prefer that. I bet if Deck were doing it, he'd do this. Mine just kind of works out. Okay, whatever works for you. I don't care. All right, you want to do some, let's do a little bit of problem. 320. Adjusting and reversing. Let's just talk about reversing it. Okay. Here's what I want. Here's the deal. Yeah, we're on page 141. The one we were working on last time, or we talked about working on, exercise 320, reversing. Here's the deal. Listen to this carefully. You do not have to do reversing entries. You do have to do adjusting journal entries, right? What are adjusting journal entries for?
Accruals and deferrals.
Accruals and deferrals, basically, right? Pretty much, okay? Sometimes correcting a mistake. Getting to it, okay? So you have to make sure the financial statements reflect economic reality to the extent possible. So you have to do the adjusting entries to get the balances you want on the balance sheet and the income statement at the end of the year, right, everybody? Okay, but you can do reversing entries if you want. What would they be dated? Let's say the year end is December 31st, whatever your year end is. December 31st. The very next day, the very first thing you do before you record any transactions for the new year, after you close the books, right? You should close the books at the end of the year, right, guys? Before you do anything, you do the reversing entry. And it's going to give you ridiculous balances in the accounts, right? Because you're reversing things before they really reverse. But who cares? I'm not doing a financial statement, okay? Doesn't matter. So if a company wants to, they can make these reversing entries, and now everything's reversed and you don't have to worry about it later. What most companies do is they don't bother with the reversing entries. They just wait until the next transaction happens or until the next accounting period happens and they're going to do a financial statement, and then they'll make appropriate adjusting entries, okay? So do them if you want to, don't do them if you don't want to. Now here's the deal. When we used to do all this stuff by hand, and you had bookkeepers, accounting clerks, recording the transactions, You wanted to be able to train them, well, a lot of people want to be able to train them to do it one way and always do it exactly that way. So every time I buy insurance, you either debit prepaid insurance and credit cash, or what would be the alternative? Still credit cash, but debit what? Insurance expense, you guys. What's the prepaid insurance going to become when you use it up? Insurance expense. So would you care if your bookkeeper recorded a debit to prepaid insurance, or they recorded a debit to prepaid insurance? Seeing as at the end of the year you have to make an adjusting entry anyway, it just makes it a different adjusting entry, right? You don't care. So can you imagine having two bookkeepers working for the same company and they're trained by different people? One's debiting insurance expense and the other's debiting prepaid insurance when they buy insurance, when the insurance bills come in? Sure. We don't care. We're going to adjust from where it is to where we want it to be anyway. Okay? But the nice thing is, in a big company, they could train people to do it one way, make a reversing entry, and they didn't have to know what to reverse. It works really good. I'll show you some examples next time on interest receivable. Let's say I have 1,000 notes receivable, and they're all due on different days, right? Payments, and I'm having to accrue interest on all of them. A reversing entry is far better than keeping track when they give us the cash, how much is going to be debited to interest, or credited rather to interest receivable, and how much is going to be credited to interest revenue. It just all goes to interest revenue. It's easier to program the computer then too, which is why a big company like GE would use these. You don't have to program one way, and then how it works, okay? So the key thing is, remember, you don't have to do this. Now here's the other thing I want to emphasize with you. I mentioned this last time. Don't memorize the author's rule of thumb, because you'll have a 50-50 shot when you try to recall it. You know what I mean? It's either the balance sheet account ones or the revenue or the income statement account, the revenue and expense. It's one or the other gets reversed. Whichever one you went to first, permanent or temporary and all that nonsense. Here's a better rule. Here's what I like. If it is never ever going to reverse in the future, please don't reverse it. An example. An adjusting journal entry is debit depreciation expense credit accumulated depreciation. Are you ever going to undepreciate it? No. Don't reverse that one, okay? For crying out loud, right? How about if your entry was debit insurance expense and credit prepaid insurance because you used it up? Are you ever going to unuse it? No. Don't reverse it. But what if your entry was debit prepaid insurance and credit insurance expense? Will you ever use up the prepaid in the future? Yes. Reverse it if you feel like it, or just wait until you use it and reverse it with an entry later. Got it? So you can just use common sense. So what I'd like you to do, I'll let you out of here, but what I'd like you to, or unless you want to stay a while? You want to work this problem before we go? I see no, I see yes. Does anybody have to be somewhere? Okay, you guys can go whenever you have to leave. Let's work it. Let's work it. Let's do it. We're not going to have enough time to get through everything anyway. Isn't this wonderful that these students want more than their money for? Thanks, it's great. No, they don't. Okay, let's try it. Give me the adjusted, yes sir.
Is this E320?
Yeah, E320. Let's give it a shot. Okay, the prepaid insurance account shows a debit balance of 5280, right guys? Go ahead and go if you have to. Seriously, guys. I'm recording this anyway. Prepaid insurance, I think. What was it, 5280? Debit, right? Now that's the balance after they bought insurance for the period, maybe took some out of there for the period, we don't know. All right, good. All right, 5280. And let's see. Representing 2-year fire insurance policy dated August 1st, is it? So this little problem gives you adjusting entries. I'm going to expect you to know how to do adjusting entries, closing entries, source transactions, prepare financial statements. Chapter 3 is principles of accounting, right? Everything's in there. Okay, so I've got prepaid insurance here. That's from August 1st. What's the year end in this problem? December 31st, right guys? Okay, this was for how many months? 24 months, right guys? How many months have gone by? Be careful, it's August 1st. So how many months have gone by? No, between August 1st and December 31st. That's what we'd be using up, right? How many months is that? 5. Is that 5? Include August, right? August, September, October, November, December. Is that 5 or 4? Okay. All right, guys. 5 months, okay? Yeah, I use my fingers there. Okay? So 5/24 of that 5,280 should be what? Take 5/24 times 5,280, divide it by 24. Right? Divide it by 24 and take it times 5. How much is that?
1,100.
1,100. Which account should be 1,100? 5 months went by. I used up 5/24/7. The amount I used up is called what?
Insurance expense.
Insurance expense. I want my insurance expense to be $1,100. Got the idea? So I want insurance expense. Apparently it has nothing in it. They didn't tell us anything different in the problem. So I guess it has nothing in it. I like it to be 1,100, right? By the way, on my quizzes and tests and in real life, look at what the balance is in the account and adjust from where it is to where it should be, of course, right? But if it's 0, it should be 1,100, right? How are you going to get there? Debit it for 1,100. So my journal entry is going to be debit insurance expense for 1,100. Got it. And what are we going to credit for 1,100, of course, seeing as we used it up? Prepaid insurance. Whoops. Keith. Prepaid insurance gets credited for 1,100, doesn't it? And what do we have now in the prepaid? 4180, is that right?
Yes.
Is that the right number? How would you know? How many months have we not used up? 19/24. So what was 5,280 divided by 24? How much was it? 220. What's 19 times 220? 4,180. We are miracle workers. Big deal. Okay, now I want to ask you the question. So will you reverse this one? You debited insurance expense and credited prepaid. Are you ever going to turn that? Are you ever going to turn back the clock, I guess, and have that prepaid again? The expense goes away and no, you won't reverse it. Got it? What if instead they had done this? Let's say instead what they did was they put into insurance expense the whole thing. So on August 1st, they put into insurance expense 5,280, guys. And there's nothing in prepaid insurance. Got the idea? Where do I want to be at 12/31? Same company, just different bookkeeper, huh? They did it a different way. Doesn't matter. Big deal. It's not wrong. You can put it in insurance expense instead. What do you want insurance expense to be at the end of the year? The amount you used up. How much is that? 1,100. What do you want prepaid insurance to be? The amount you didn't use up. How much was that?
41.
4,180. Everybody get it? What's my journal entry? Debit what? Prepaid insurance. How much? 4,180. Right, guys? You guys are slowly getting better. By the end of the semester, you're going to be keeping up with me. You guys are keeping up with me, aren't you? Everybody else gets what you do. Okay? Right? Right. Oh, by the way, if you're wondering why they're keeping up, they took it last semester too, and they're doing it again. Yeah, they're keeping up. Big time. What am I going to credit, of course? Insurance expense. Excellent, guys. Now, will you reverse that one? You don't have to, right? You can just leave that prepaid in there at the end of the next year, right? Or whenever. You do monthly statements at the end of the next month. You can make an adjusting entry taking some of the prepaid out and put it into expense, right? Every month it'd be debit insurance expense 220 and credit prepaid insurance 220, wouldn't it? Month after month after month. Okay, but you don't have to, you can instead, if you want, reverse it, right? Because it's going to reverse in the future. Got the idea? So I would say yes, this one I would reverse. I would say no, this one I will not reverse. Got the idea? That's what they want you to do. What would the reversing entry look like? This is hard. You debit insurance expense. Now remember, this is at December 31st, right? On January 1st, we debit insurance expense for 4180, and we credit prepaid insurance for 4180. Now, I know you haven't used it up on January 1st, and you got all that in there in expense because you just closed your books, right? Made the expense account 0. I know you haven't used it yet, but who cares? We'll make sure it's right when we do financial statements later. Got it? So reversing entries are kind of handy, and we'll do more of them next time. See you guys. Work this problem again, change the numbers, and work it again, share them with each other and work them.
Good weekend.
You too. Fun time.